Hello, everyone, and I will be your host, Tim Richards, 32 Trades, My Profits, and now where everybody is in the My Options Club, My Options Trading Club, looking at the second half of 2023. Now, in the beginning of the year, I posted a video with my predictions on what I thought would be coming in the early part of 2023. And every one of them was blown away. I'll share the link here somewhere in the video if I can figure out how to do that. But in any case, I'll share it at the end of the video. It's been a hell of a first 6 months. The creation of the word AI has changed the atmosphere, completely changed it. Looking here at a year-to-date S&P 500 sector, obviously everybody knows about NVIDIA, which, as I have said many times before, it's a Ponzi scheme. NVIDIA is fucked.
Different times just to kind of get a real deep color. And then kind of go in here at the bottom.
Microsoft, 41%, Apple, 48%, Google, 36%, Amazon, 55%, Tesla, 127%. Meta, interesting with Meta. I'll jump on the chart with Meta later on. AMD, 79%, AVGO, 56%. And then you see the rest of everything over here. Everybody has had the ability to scroll around FinTwit and see there is a major bullish case and there is a thrown into the corner, dunce hat put on and made to stand against the wall bearish case. Both are right. Neither one of them is wrong. It's all about timing. Stock market's always been about timing. And when you've got someone throwing you knuckleballs, you choke up, you trade less. When you got someone throwing you 70-mile-an-hour underarm fast, softball pitches, batting practice, you fucking dig in and you start smacking home runs, Bryce Harper style. So this is where we're at year to date. And I'll bring you over to a couple things before we get into it as to the S&P 500 components year to date. Number 1, NVIDIA. Number 2, Meta. Number 3, Carnival Cruise Lines. Interesting. Tesla, Royal Caribbean, Palo Alto, Norwegian Cruise Lines. See that? You got 3 cruise lines all here in the top 10 producers of the year. AMD, Pulte Group, General Electric. Those guys knock it out. Now, a lot of people are fresh. And when we mention weight in the chat room, kind of gets a little bit lost. People are wondering, what do you mean about weight? What do you mean about weight? Well, the S&P 500 is a weighted index. The Dow Jones is not. The S&P 500 and the NASDAQ, they are weighted, as well as the Russell, which is pretty insignificant, and we'll show you that. So here is your Magnificent 7. Apple, Microsoft, Amazon, NVIDIA, Alphabet, Class A, Tesla, Meta, Alphabet, Class C. Still the same company, Google. Take off the L. So 7 names. Now, I've gone ahead and done the calculation way ahead of time. These 7 weigh 27.66% of the S&P 500. I don't have the calculation up in front of me, and you know what? Why not? Let's just do it live. Why not? So, Microsoft, 12.919. Apple, NVIDIA, Amazon, Tesla, Meta, Google, and Google. These 7 names, 7, Alphabet is a double. Goog, Google. 55% of the QQQ. So when we talk about weight, this is what we're talking about. And this is why I do, without knowing who an individual is when they message in the chat room, one of the reasons why I like to do the one-on-one calls is because when an individual is discussing getting into a position on one of the weighted stocks, my question always is, why not look at QQQ? QQQ, you got all of them in there, and whether they're brothers or sisters or cousins to each other, they all tend to trade in the same direction. So QQQ year to date, granted, yesterday was July 3, 37.83%. Now, we've had a flat day, half day yesterday. Call it a flat day, more or less. 3 points over there on Friday, 2.8 over here on Thursday, which again, we knew, even though it did close red. These are the ranges. As you can see here in the green, the volatile ranges where we were trading greater than 4 points every day ended as we came there into the end of the month, which everybody understood there was a major rumor rolling around that we were going to get a big sell-off going into the end of the month, end of the first half, end of the quarter, because of the performance of what we had accomplished since the beginning of the year, up 37.8%, 37.5 on Friday. The month on QQQ ended up 21.6%. Prior month, up 26 points, 8%. Prior month, back here in April, when the word AI was created, back here at the end of the month. Right here on April 25th, we were down at 309.89. 2 days later, 3 days later, we're up at 322. 10-point move, got the month green. When AI was created. AI was created here during this final week of April. That was when your earnings came out. Back in March, had that big drop, our big March drop-off. 285 down there on your low, March 13th. You had a 27-point month, 9.4%. Then you had February, which was just basically flat, chopping around. After having that major move to start out the year, 26 points, 9.67%. Now, sticking here with the QQQ and how we've gotten to where we've gotten, because we're going to cover this later on, this 37.5%, fraction of it, a fraction. A fraction of all of this green is because of the word AI. Going into the start of this year, the bearish sentiment for a final fifth wave lower was incredible. As many of you may remember, I was calling for the Santa Claus rally, which did not occur. And then in January, we went off to the races. 70% of this is because of all the shorts that had those long-dated puts. March, June. There's even some longer-dated puts out to September and December. And that was what helped facilitate the short squeeze that we got, which took QQQ from that big, massive 260 bottom level all the way up to where we are here right now in the 370s. Now, again, you look over at my prediction, I was calling for the 330s in the very near term over on the QQQ. We've blown that away. We blew the 330s away back over here in May, which as June was created, we've created a big air pocket underneath. And I'll show you here on the SPX what I'm talking about. You know, over here, June 1st, we started out 4183, got a little move. You know, we had been trolling around that 4200 level, 4205 at the end of May. Then the very first day, first night of June 1st, June 2nd, 20-point gap up, 4221, 4241, never even came back to touch it. Spent 5 days, 6 days over here in the 4200s, and then said, fuck it, we're going for it. 3 days, 3 closes in the 4300s, boom, 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 up right there onto the high of the month, 44.48 at the time. Come back down, had our little dip there last couple of weeks. And as you can see over here on the range, we've had no range whatsoever, zero. 32, 26, 30, 25. The range on the SPX has gone to complete shit as the VIX has lost that 1451 area. All during the last 2 weeks of the month over here in June, gap down, gap down, gap down, red close, red close, red close. All it took was one green close over here on that Wednesday when, if you remember going back into your emails in your chat room, the very, 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 very aggressive alert of the NDX being oversold. And therefore, we got our gap, 43.28, 43.35, and that has never recovered to get that gap filled from that week. And here we are at the 4400s. So we're 27.69% above the October lows. We are 17% above the March lows, 39.09. And even though this is still working out very well from a spread point of view, it's time to give up with the full moon having happened yesterday on these 100, 150% trades. It's time to go into being an adult and really looking for these 20%, 25% trades, 40% here and there, because we have just finished our 26th trading session without a minus 1% visit intraday. And now a minus 1% visit on Wednesday when we open up would only be down to 44.11. We're still not filling that gap that we have from the other day where it was 43.96 to 44.22. Another greater than 20-point gap. So I'll bring you over here onto the charts and start going through it, because you've got to go back to be able to go forward so that you get an understanding as to where, why, and what. And again, from here, I'm looking at the major cycles. I'll zoom this out, which I kind of actually have to go a little bit further out. And I'll go on the monthly because I am going back pretty far. So this was cycle 1 where we peaked over here on the .coms. And I had drawn a Fibonacci extension coming off the Monday massacre, Black Monday, back there in 1987, up to the .com highs to the 2002 lows. Took me to 29.30.94. And a lot of you that were trading with us back at that time, you remember, I started screaming, I found the top, I found the top, I found the top. This was back in July, August of 2018. So we'll zoom out of this to bring it into a little bit of a shorter version. Daily, maybe, yeah, we'll do it daily. So, yeah, I'm over here after that big move in April, which again, coming off of that low in 2016 and then Brexit and then the election dip, Trump had an amazing run of trading sessions without a minus 1% move, an amazing run. And then we peaked over here in January of 2018. So let's just move this out here to 2018. And we come in here, and here we are in 2018. And again, I'm screaming, I think I found the top. I think I found the top. I think I found the top. 29.30.94. And that is exactly what we come up to over here in September. And then we revisit it here in October. And then we had our 20% decline. And again, a lot of you that were around, you remember Christmas Eve, Boxing Day 26. I'm sitting there screaming, buy the fucking dip, because we had gotten down to minus 20%. We hit some Fibonacci levels. Everything was looking fantastic. And where we've come from that, as you can see, I'm looking at this Fibonacci extension coming off the 2016 low, up to COVID, down to the COVID lows. And as you can see there, right dead smack to 47.54, which was, again, one of the reasons why we were able to get aggressively short going into the beginning of 2022. Fibonacci extensions, everything worked out pretty fantastically for the ride up. Once we got this 1-2 in place for the middle for the wave 3, seemed to be working pretty appropriately as we came up just above 44.54, and then we had our little bit of a dip down. Now remember this 44.54 area, because that's where we're at right now. So we'll bring this out here onto a 2-year chart so you can see exactly what we're talking about here from where we're at on the top. So again, this is your 47.54 that was coming off of that 2016 COVID, March 20 COVID lows. Bang, bang, bang. And then you had your drop zone, your big A, your big B, and it came down perfectly for a 1, 2, 3, 4, 5, almost perfectly for that 161.8 extension. So here we are now. And now is where everybody's getting a little bit clusterfucked because we've been in this rally zone since the March lows, went nowhere for April and May, traded the hell out of it, and then June just created this euphoric pocket. We're up 967 points from the October lows. We've got a very clear cup handle, and everybody is looking for this to continue and head up higher. Now, what the bull's case for now is, because this broke this 43.73, which would have been a perfect C equals A for a bearish wave up, because it broke through that, that's it. The bear's case is completely gone. Now, this is a bullish case, and we're going up into that 47.50 area. That's what their case is. That's what their thesis is, without having any kind of declines since the March low. That's what their thesis is. And I'm not going to hold it against them. They're not wrong. They're not yet right. Where I am, for me, is this zone that we're at. This 43.09, right up to that 44.34, hovering up and down around this 43.73, it gets to the next point that we're coming to, which will go on to the volatility. But before we go on to the volatility, let's stick with this on the SPX. So where I still sit for me is I am looking for a bullish dip. That's what I'm looking for. I'm looking for this 20 point gap to get filled. I'm looking for us to revisit the lows that we had here in June, the middle of June, 2 weeks ago. And I am looking for that third gap and appropriately the fourth gap, the big one that was there from June 1 and June 2, down here at 42.21, which would be a 5% decline. Let me change this, 44.58.48, where a 5% decline would take us to 42.35. Not looking for these low gaps down here in May to get filled. Not looking for any of the other ones down there to get filled. Simply looking for now to be filling just down here into this 4,200 area, get a nice proper oversold, and then from there, start heading to the upside. And the upside, looking up here, not only 46.37, but looking up into the 47.20 area, 47.25, 47.95, that would fulfill what I'm looking for this B wave to have completed up here. At the moment, what I'm looking for is a dip to be bought because, again, when you do bring it out into all looks and all ramifications, this has been a very extended wave 3. Now a wave 4 to the downside, and then your move to the upside. A little bit easier to see it over here on the QQQ. So here's your QQQ coming back off the October lows where you had these multiple bottoms right here at 260. Very big spot, 260. January begins, 20% run, 9% decline, 13% run, 3% decline, 3.83%, 9.53% run, 2.88% decline, and then the big gap up there, 331, 336, and this final move up here, a 13-point move coming off of that mid-May, end of May low, which the gap here was created by NVIDIA. That was how we created this gap. And then last week, 2 weeks ago, going back, minus 4% decline, and here we are. Here we are chilling in this area. Now, come out to a cleaner version of it, and it starts to look a little bit easier to see, where what we've got here is a very clean 1-2, this being, call it the bullish wave 3 of wave 3 having completed. Wave 1, wave 2, wave 3. So what we should be able to get is a little bit better than this 4% decline for a wave 4, and then the move to the upside, which the upside is a little bit easier to see, because what we're looking for is right around that 383, 384 area. And then after that, with the calculation of where our wave 4 comes down, a higher move. Now, what is a little bit worrisome is that this dip that we got, that 4% dip, 372 down here to 357, may have been all of that wave 4. And now we are beginning to progress into the final wave 5 of Q3 of QQQ, not Q3. Which brings us over to the other cousins, the Russell and the Dow. Now, the Russell would have to have been bullish to suggest that we are going into a rally, because the Russell usually is the leader. It is not the leader. As you can see here, 20% from the all-time highs has been rejected in August, again over here in February, lower highs to that point, and here we are again trolling at this major resistance area right around 189.50. Zoom out here so you get a bigger, wider view as to this blue channel, and this is where our blue channel is that we are riding in. So from a health point of view, I don't mind the Russell 2000 being the way that it is and where it is. It's just that it should be, from every dictionary that you go and look at about how to trade the stock market, the Russell 2000 should be the leader with the QQQ, the support, not the vice versa, the way that we have it right now. Having gone over all of those weighted indexes and the weight level that those stocks have, if you roll out of the QQQ to roll into the IWM, all that you're going to do is collapse the SPX because you have too much weight. So it's very touch and go for where we're at right here. And again, I'll bring you over here to the Dow Jones to give you a look on this. And again, here, Dow Jones, looking back all the way to February last year, 2022. You can see here, it's been a perfect little ride, and I call this here wave 4. You had your explosion off of October into the December highs. SPX 4100 here, okay? And here we are trolling, going just fractionally above this resistance area, while it should be projecting to head back over here to the March highs, somewhere up here into, not the March highs, the April highs, over here around this 35,400 area, 35,000, 35,400. How? I can't answer that question. I can't. What I see here, because what everybody else is looking at, everybody else is going euphoric about, hey, we've got a double bottom inverted head and shoulders pattern. This is going to explode. That's what you read everywhere, as if it's been copy and pasted. But what continues to be neglected is the VIX. Volatility has completely depleted. That's why we're having small ranges on the SPX. Completely depleted. Everybody's had a chance to look at the fear and greed index and seeing that it's all the way up to extreme greed. Going back to how the conversation began on how the QQQ was able to advance itself into AI and then use AI to go to an extreme level, was because of all of the shorts that were in longer dated puts. All of them have been wiped out. Now what we have here is the VIX. And what you've got is when you're trading here, okay, we knew Russia was going to invade Ukraine 2 months before it happened. We knew COVID was happening a month before it happened. I showed you there on the SPX, the 2930, when I said, hey, I found the top back in 2018. We knew about that a month before it happened. You go back to 2007, the financial crisis. Guys knew that this was going to happen in 2006, but they had to wait until 2007 for it to top. The dot-com bubble, we knew all about that happening in 1998, but you had to wait until 2000 for it to top out. And how these tops happen is when everybody is piled into the same direction, everybody believing the exact same thing, and it's not going to announce itself. It's just going to come out of nowhere. And then that's going to start to trigger that snowball effect. And again, we're not looking for this to be the bear case where we've topped. I've spoken to many of you about this, how it does not fit. All that we should be getting here is a very, very, very nice dip to be able to be bought as we head into the latter part of the year. We were due this in April. I showed you last week. The charts are again 100% confirming that that dip is due to be occurring. And here we are, and we're waiting. So why I have you here on the VIX is to show you, and I will fix this so that you can see what we're looking at. Okay. Here's your resistance coming down, which again, the VIX is a product that is due to go to zero. That's the way that it's made. Here's your resistance, and then here is your longer term support levels. Now you could bring this longer term support level back over here to 2018, 2019. I don't find them very applicable. I mean, we could go ahead and, for sake of conversation, we'll go ahead and we'll move this. We'll bring it down over to here. Doesn't change anything. See, it doesn't change. But in order to recover this long-term support area, you're talking about the VIX spiking up above 18. Okay? You're talking about getting back up here into the 17, 18 level, which, again, I'm not a trend line guy because they're not accurate when you're not on a 1 minute chart and you haven't drawn them to specific pivot points. But for the VIX to recover back up to the support level, you're talking about the VIX 17. The VIX 17, you're talking about a major decline that's occurring over there on the SPX, whether it's a 1% day, which we haven't had for 26 sessions, whether it's multiple 1% days, which we have not had since, make sure we're right back here. The last time we had a minus 1% dip, we had a multiple minus 1% decline day. We dropped from that 42.13 down to 41.04, the May lows, before this explosion took place to get us to where we are now. And again, bring to your attention, I apologize for this taking too long, yesterday was the full moon, which I will go on again and update because I have not updated it. But here with the VIX, bring on to our real-time chart. I keep saying 1451. 1451 has to reclaim. If the VIX reclaims 1451, the bears stand a chance. 17 area is where I showed you here on that line, where it would need to recover to. And lo and behold, it just happens to be that we have this gap that needs to be filled to the upside right up there in the mid 17, lower 18 area. So it is appropriate that it could and should be a plausible application that could happen here. And then you come into your full moons. Now, these last full moons were our lows. low, low, low. That was our last full moons. Our last full moon, go again, came here on June 2. Come in here on June 1, and you had your big run. And then you had your dip, which came there right there on June the 8th. Those were our lows. Come out of June 1, bring it back over here. There's your lows, plus or minus 5 days. We're coming up to a full moon now. Full moon now is coming here on July 3, which was yesterday. So we're inside of a full moon. Is this going to be the same full moon as we had in February? Is this going to be the same full moon as we had back over here in August? Is this going to be the same full moon as we had here in February? Same full moon as we had here in April? Same full moon as we had here in September, where the full moons are happening on the tops? I can't tell you that answer. But what I can tell you is everything is set in place that should suggest very strongly, as we start to progress into the beginning of earnings season, that we should be looking at a first half of the year pullback no greater than what we have already been through over the last 30 days, which would again bring us down to roughly the June lows. No greater than the June lows, either on the QQQ or over on the SPX. June lows, obviously much greater than what we'd expect to, because it started over there at 41.83, but a gap down here right to around this area, this 42.65, just above that gap that needs to be filled, 42.20, 42.41. Everything would still be very bullish, and we would have a very, very, very oversold daily. So it, again, all comes down to how they are going to play out the beginning of the year, or the beginning of the second half, this VIX wider term trend line. Because again, if you can get this fix to spike up here to 17, go fill that gap. Everybody and their mother, you know how fucking quick they are. They will all move from bullish to bearish, and they will be able to trap all of those bears, because we will have major, major, major buy signals on our charts, and we will be able to progress into September, October very cleanly and very bullishly with some momentum to the upside. So I apologize for it taking a little bit longer than I expected it to be, but it is 4th of July weekend, and I will leave you with this. I am a first-generation born American. The day I left to explore outside and start working abroad, my first night in Bangkok, I've told many of you this, first night in Bangkok, I had to watch the World Trade Center go down. And I was not supposed to be out there living. I was out there exploring, looking at what was going on at the time, and considering whether or not I would stay. I couldn't fly back because the borders were closed. There's a couple of things as a grown man that bring me to tears. Not many, but a couple of things. But one of them is always American pride, especially around that 9/11 event. So I'll leave you with some Ray Charles. I wish you all the greatest weekend. I hope that we all get to expeditiously start taking advantage of a very, very nice projected market like we had all through the beginning of the year, January, February, March, April, May, and then all of a sudden June came out. So happy to be your tour guide, happy to help everybody out, and most importantly, happy to know each and every one of you individually so that we can all, as a group, pay it forward, make the world a better place. Have a great weekend. I'll see you guys in the chat.
Ladies and gentlemen, to honor America with the singing of America the Beautiful, please welcome the man and his soul, Mr. Ray Charles.
who more than self their country love. And mercy more than life. What I'm singing about the land, this America, sweet America. Be nobleness and every gain divine. And you know, when I was a little boy, I remember we always sang these words. Oh, beautiful, far spacious sky, far amber waves of grain, far purple mountain majesty. Above the fruited plain. Now wait a minute. America. America, God, just grace on me. God, I love him for kind of yeah. He cried like a, I don't you remember, save his brotherhood from sea to shining sea. You know, I wish I had y'all to help me sing this thing here. Go ahead.